Hey, welcome back. It's JWalter here. In today's video, I'm going to be sharing an update from Corelogic. They just announced their housing market predictions through 2022. So in today's video, I'm going to be sharing that with you and also some updates regarding active listing inventory and home prices in the US. In addition to that, mortgage interest rates because those have been skyrocketing. With that said, let's begin today's video. And by the way, if you're looking for a real estate agent referral from virtually anywhere in the US, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. So with that said, let's begin today's video. So this is from Corelogic. They just announced this about a week ago for their December 2022 forecast. So they have what's called the HPI, or their home price index, and they said that home prices nationwide increased year over year 18.5% in December 2021 compared to December 2020. Their forecast, though, is going to be an increase on a year over year basis by 3.5% from December 2021 through December 2022. This is more in line with what Redfin is forecasting. Zillow is forecasting a 14% increase, so we'll have to see if they're right regarding that. But it's really in line with what Redfin is forecasting as well. Around 3.5% increase in home prices through December 2022. So let me know what you guys think about that. They went on to say in this report that price appreciation averaged 15% for the full year of 2021, and that was up from 2020 with a full year average of 6%. So a big increase, more than double what we saw in 2020. They also had this to say, which I found to be very interesting. They said, while there have been questions surrounding whether we are currently in a housing bubble, the Corelogic market risk indicators suggest a small probability of a nationwide price decline and points to a larger likelihood that a fall in price will be limited to specific at-risk markets. I'll go over that here in just a little bit because they name 5 key cities in the US that they feel are at the greatest risk of home prices decreasing over the next 12 months. Their forecast shows that the national 12-month growth is going to be slowing over 2022, and during the early months of the year, it's projected to remain above 10%. Keep in mind, home prices are really an indication of what the housing market was 1 and 2 months ago. So when we look at the median sold price in January, that's really what the market was like in November and December of last year. It's a lagging indicator. In any case, they say that during the early months of the year, they expect home prices to increase by 10% while decelerating each month to a 12-month rise of 3.5%. So the chief economist of Corelogic had this to say: so much of what we've seen in the run-up of home prices over the last year has been the result of a perfect storm of supply and demand pressures. In other words, a lack of housing supply and a lot of demand, and that imbalance is what's causing home prices to increase so greatly. As we move further into 2022, though, economic factors such as new home building and a rise in mortgage rates are in motion to help relieve some of this pressure and steadily temper the rapid home price appreciation seen in 2021. So if we have a lot of new houses that were hit the market, and if mortgage rates increase further, that could put a damper on our housing market. And I have some stats regarding mortgage interest rates here in just a little bit. So on a national level, home prices. So take a look at this. So no states posted an annual decline in home prices. So every state in the US from December 2020 through December 2021 had a gain in home prices overall. The states with the highest increases year over year were Arizona, Florida, and Utah. Look at that. 3 states that had a price appreciations of over 25%, which is insane. So have a look at this. So Arizona was the highest, 28%. And then we had Utah in third place there, 25.2%. Tennessee, 24.5%. Nevada, 24%. Nationally, it was 18.5%. The bottom list, though, which these are still great home price appreciation numbers, at least from a historical speaking, because in general, home prices increase about 3 to 5%, not 28%. That's insane. Anyways, the bottom of the list for the of the states for home price appreciation, at least according to Corelogic, is Illinois, North Dakota, Alaska, New York, and DC. Look at DC, only increased 3.7%, by far in last place as far as the price appreciation goes. All right, this report goes on to say that these large cities listed here below, continue to experience price increases in December, with Phoenix leading the way at a 30.2% increase year over year. How insane is that? That's basically 10 times the historical averages for price appreciation. San Diego, 22.4%. LA was 14%. Las Vegas, 24.4%. Phoenix, Arizona, 30% is absolutely insane. I don't know how that's not sustainable, obviously. Denver, 18.6%. And then some of the states in the east, or cities in the east, increased still, but not as greatly as Phoenix is, for example. So kind of changing gears slightly, here are the top markets at risk of a home price decline, at least according to Corelogic. So according to Corelogic, here are the top markets at risk of home prices declining. So the cities that they believe have a very high chance of home prices declining, above 70% probability, would be Prescott, Arizona, Merced, California, Lake Havasu, and this city, which I cannot pronounce, in Massachusetts, all above a 70% probability of home prices declining over the next 12 months. And then also in fifth place here, Kalamazoo, Michigan, with a high probability in the range of 50 to 75%. So I'm not familiar with any of these areas. Merced is about, I think, like 2 hours south of me, maybe about an hour and a half south of me. I don't really know a whole bunch about these markets, but if anyone lives in these markets, please let us know your thoughts about this and see if this is accurate or not. All right, so changing gears slightly, that's their forecast and what's been going on over the last 12 months. But I also want to give you an update, according to Realtor.com, about what's really going on right now with new listings, housing inventory, and median listing prices as well. So Realtor.com, they released a weekly housing market update. They said that the housing market is moving very quickly in February. The pace of home price growth ticked higher, and homes are selling even faster than they did this time last year. The number of homes actively available for sale remains at all-time lows, at least in part because builders have not kept up with household growth over the last decade. We all know that builders have not built enough houses, and that's one of the reasons why we have a low amount of active listing inventory. They said that their recent analysis suggests that the housing shortage worsened in 2021 despite some of the best housing starts figures in 15 years. So I'm not going to go over this entire report here, otherwise it's way too long, but I just want to kind of give you like a brief summary of what they are concluding here. So median listing prices. This is the listing prices, of course, is what the seller is asking for their house. This is across the nation. So median listing prices increased year to date by 11.2%. But have a look at this. So for the week ending January 22nd, on a year over year basis, the median list price increased 11.7%. But look what happened the following week. It increased by 0.1%. The week after that, it also increased by 0.1%. So the median listing prices have been increasing. Doesn't mean that these houses are going to sell for these prices, but it's going to be interesting to see what they actually do sell for, because listing prices are increasing, but it's still at low levels. New listings. So new listings is when a home seller lists their house for sale. That is a new listing. It becomes active housing inventory. When active housing inventory decreases, that's when a home seller accepts an offer, by the way, pending home sale. In any case, new listings are down 9% year to date in 2022. And then also active listings, which is another word for housing inventory, is down 28% compared to 1 year ago. Huge problem. That's imbalance between supply and demand right now. Time on the market, houses are selling 10 days faster than they did 1 year ago. All right, so changing gears slightly, I want to give you an update regarding the yield on the 10-year U.S. Treasury note. That is tied loosely to mortgage interest rates. So when the yield increases, so can mortgage interest rates. And we have been seeing that this year so far. So have a look at this. So this is the 10-year U.S. Treasury note over the last 1 year. It actually surpassed 2% for the first time since, I think it was 2019. Yeah, 2019, July 2019. We haven't seen these figures this high since July 2019. And that's one reason why mortgage interest rates have been increasing. So have a look at this. This is according to the Mortgage News Daily. If you guys want to follow mortgage interest rates on a daily basis, awesome website. It's called mortgagenewsdaily.com. have a look at that, because I look at this multiple times a day to kind of figure out where the housing market or where mortgage interest rates are headed. They post the daily mortgage interest rates at about 1 p.m. Pacific Standard Time. They only post it once per day. In any case, I want to point this out because, as I made in my video from a couple of days ago, mortgage rates hit 4.02%. But today they increased further to 4.05%. So over the course of the last year, we started the year at about 3.29%. Now we're at just over 4%. So over a 0.7% increase in just this year alone. For every 1% increase, that causes buyers' purchasing power to decrease by 10%. So this is a big problem. And when we look at rates from 1 year ago, rates have increased by 1.22%. Last year, they were at 2.83%. Now we're at 4.05%. So it's going to be very, very interesting to see if mortgage interest rates increase further. And by the way, this is for 30-year fixed rate mortgages. So stay tuned on the channel. I'll definitely keep you posted. And also, if you haven't subscribed to this channel already, please subscribe and I'll keep you posted. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate it. Have an awesome weekend, and I'll see you on the next video.